Hey folks, welcome to Friday the 8th of April 2022. And yesterday we had a pretty dismal day on equities from the aspect of, no clear trade direction, really a refirming up of the lows that we'd seen post FOMC on Wednesday. And certainly we're holding quite well now into the session in the European session from the lows seen yesterday. So let's get over and have a look. Very quiet day on the markets expected today. On the data front, certainly oil is under pressure here, and the dollar, rightly so, is now released sort of to the upside, and I think we should be kind of pricing in for further downside on the euro at this time. So if I just pop over on the charts here, you can see really well. Let's have a look at the Dixie to kick things off here. So on the weekly bars, so you can see here now, we really started to get into these upper prices above the 99.38s. 100 spot 38 destination on the upside, and really up into 102 spot 4s on the trend. This fits in with the cycle of rate hikes that we have coming down the line ahead of us this year, and it is going to weigh heavily on stocks as we push further higher in the dollar. The bonds are going to be under a lot of pressure. The hunt for this yield to increase throughout the rest of this year is really going to have these bonds under a lot of pressure. And also then gold, the inverse correlation to the yield, rising yield, lower gold, lower bonds, lower gold. So that's kind of the ground floor of the base case scenario, under this cycle of rate hikes that we have, right? So just wanted to mark your card there about what the dollar should be doing over the next medium-term horizon, and then also, where equities may find it quite a bit of trouble. So here on the Nasdaq, you can see yesterday, really what started off on a couple of days ago here. Thursday, Wednesday, Tuesday was, Monday, Tuesday were the tests at the 200 and 100 EMAs crossing over. And so, you see that on Tuesday, once we had that confirmed cross down imminent, we just sold down really from the 147s all the way down to like 370s essentially here. So, yesterday on the mid left of your screen, you can see the market really did make a 5-course meal about getting from 14,437s down to the 14,370s support, then putting in the turn, and now we're back. All is forgiven, and the 50 EMA generally to act as support where we sit right now. So I can turn that 50 EMA on here. That's the let's see, that's the 50. Let me just show. Actually, hold on, just got a bit of a problem with the charts there, so let's leave that one. Oh, sorry, no, here we are. Yeah, the 50 EMA coming in here, generally support to be had. I think if we are to go lower, I think the market would need to pull back into the 100 EMA, or certainly the 14,987s area here. But generally, I think we can spend a lot of time between the 1437s, the lows of yesterday, and the highs we've seen on the week so far on Monday and Tuesday there. So before we kind of generally figure out what the market wants to do from then on. So carrying that same thinking across into the SPOOs. Here we are in the SPOOs on the day, flushing below the 100, generally finding support 44.56, and up we go. But just a lot going on in this level here, 44.56, confluent with the 50 EMA, the 100 just above. We have pushed forward towards the 45.25s, looking for a supported pullback to around pivot here, maybe the 44.76s on SPOOs, before then looking for higher prices. I think this market, I think, will come back on the 45-45s to kind of firm up the resistance that there is up here. Overall, I think generally we may still be on for new highs, or certainly back to the all-time highs by the mid-summer time. The Dow here yesterday did actually head, I think if I recall correctly, yeah, we did head south quite promptly here on the Dow yesterday, a little faster than we did on the other equity markets. But generally the bottom of this line in the sand, 34,126 coming in as support, and just need a bit of patience there to wait for that support to come in, and then it came at about 5:30, 6 o'clock, and then generally driving into new highs on the session on the close, back to the 34,573s. But make no mistake, this looks all rosy in hindsight, but this was quite difficult. We were essentially stuck in the day's range through the majority of the US session, early stage US session yesterday. So until about 4:30, actually until about 5:30 when the buyers came in. And so it was, just shorts all day on that for the European traders until that 4:30 marker was the best trade. Then oil, looking at oil, certainly some big stuff coming in. Yesterday, we were looking at the shorts on this market down to targets 94.77s, and actually a couple of traders looking at, I know one of the guys, Steve, was looking at, I think, 93.50s, 94.50s, probably 94.50s. We got that target and, bouncing now, but there has been a little bit of a gap overnight. Excess into the highs here in the latest, in the previous hour's candle. Confident with 97.78s. Look, I think we're going down in oil. I think 94.77s has been breached to the downside, and I think we need to start talking about 89.89 down here. Is that going to be one direction move? It never is. So we'll come back on 94.77s, probably take a pullback to pivot, look for the shorts, and we should move down then. So 92.62s, the T1, before we look for the 89, probably 89.98. Let's just call it 90s down below. That's oil. I don't see the buying on oil at the moment. Tino's underweight, down another little bit today. New lows, I think, on the week. Yeah, so far this morning. So the gold bugs are going to have a hell of a time trying to get good position on their trades here. So look, I think we may even have a rinse and repeat of the market that we had yesterday today. So you should really be careful out there. And that's about it to close off what has been a tricky old week, I have to say. Brilliant. All right, have a good session, and don't do anything I wouldn't do. And we'll see you on Monday morning, 8 a.m. All right, take care. Have a good weekend. Bye-bye.